Hey guys, this is Simon with Trade and Perform Coaching. This is how you get a hold of me if you have any questions for me. The room is currently full, so really this is just an educational video for the members. So if you'll look, guys, you'll see that I posted out some levels tonight. And if you'll notice in those levels, both in ES and NQ, we have a really thick gathering of unfair pricing from when we ran up, right? So what that would kind of look like is here on NQ, and you'll just see where we get into. So just to show you NQ because I altered ES's chart, but we'll just see level after level. On ES, it's even more packed in. It's just consistent unfair pricing under unfair pricing going down. So a natural question would be, well, how is that useful to me if so this is the picture that I just posted here. Let me show you. So this is what it looks like. See if I can find it. Pictures, screenshots, and hold on, let's do this. 072. There it is. So for tomorrow, not counting what we are looking at, you can see it's just this is what I posted to the members. This is just thick all the way down. All these are unfair pricing. I just distinguished this with the blue color because we were inside day on Friday. So this is the non-inside day. This is the single prints from the 20th. Friday was an inside day, and so that has an important area. That's why I highlighted it in that light blue. But the important thing about that is if you were to look at that, you go, well, look, that's all. Look at this whole solid mass. How's that giving me any information? But the information's there, and I'm going to show you how to read that. So, let's get rid of this, get rid of this. And the way that information's there, the way we're going to see that is by going back in June. And you'll see we had this nice run up over here off to the left. We had multiple days up. And so it left us with a lot of unfair pricing back to the left. And for members, you'll notice I have not plugged in the overnight unfair pricing because it would just overcomplicate this conversation. But the thing I want you to see the most in here is see as we're coming down into unfair pricing, look at the V shots, right? It's not that the market can't go down, it's that you get these gorgeous V shots. So look, the market's moving overall down, but look at the continuous moves back up through these areas. So that's the first thing I wanted to show you. And then the next thing that you'll notice in here, and this is going to be very short, but see when we get to and again, this is looking back to the left, so this isn't hyper accurate because normally, in addition to this, I would add, each day we add up new unfair pricing, right? But we're just talking about the unfair pricing that was left behind as we were pushing up. And the other thing that you'll notice, if you look carefully, is the largest U-turns came from getting to the borders of the days where we were unfair. We were in unfair pricing, and then we get these giant reversals out of that, right? So that's one thing, right? And then so that's one piece. So that would be kind of what I would expect on the way down, which actually has me excited, right? I can anticipate that if I look at my triggers properly and I use the algos properly, I can find some really big, fat counter rotation moves back to the upside, even though overall the market's moving lower, right? So then the other piece that becomes important in there, if you look at this from the other perspective, let me put this all back in place. There we go. So the other thing that you'll see that I find very interesting. I should be able to get all of these back. There we go. So the other thing you'll see as we've moved down, right? So how does it treat it on this overall reversal? How does the unfair pricing react? So, excuse me, we would look at this, then this, and this, and roughly this. You'll see there's barely any unfair pricing in here. So you get back through here, and then finally up here, right? So now if we come and we look from this point, we break everything out. Oops, where did it all go? Let's see, I was in 6, this is 4. Spread it out a little too much. There we go. So now we're looking on the way back up, right? And so you'll notice that. So remember, one of the reasons that we don't just short straight out short these areas is because we're looking for higher time frame, 5 minute, 15 minute, 30 minute reversal bars. So if you look on this day, okay, so look how the reversal would come down to the prior day's unfair pricing, reverse, push out again. I prefer the longs over the shorts. Everyone knows that. We push all the way through unfair pricing. We get to this area of unfair pricing, and you can see there's some negotiation because the two bars start crisscrossing over each other. The sellers cannot take control, and we push up to the next level of unfair pricing where we finally find sellers, and they push back down, find responsive buyers, and push into the next area of unfair pricing where we get rejection back down, right? And you can see that that continues until finally a piece of data, right, a piece of market information comes out. We gapped up from the prior day, found responsive buyers, and look, so see how this is all fair pricing? And we drive all the way through. But the two things that are most important here is we're driving up, even if I was shorting, right? Which again, I do not favor shorting because of the market's ability to do this to the upside, but I'm not going to short in here, right? And if I don't play inside of here and I wait to get to the areas of unfair pricing, my longs and conversely your shorts, if you're going to short, will work much better out of these areas, right? And again, you can see on the gap up, let's say you'd become bearish here. Well, you know you shouldn't be shorting through any of this until you get up to here. So this should really be guiding your eyesight up and down. You can see how it would have helped you get longs all the way through this down move. And then it would have also helped you to upside target areas up, but also on the retest back down into unfair pricing locations. You can see this would have been established in the afternoon. This would have been the afternoon portion of the trade. You can see it gets back to unfair pricing and responds back up. This would have been the only place that would have been difficult. You would have seen here it would have pushed into fair pricing and popped back up and just gone. So remember, we're doing two pieces. This piece is a background piece, and it helps you understand. Look, if we clear this area, this is the next area. If we clear this area, this is the next area. But the most important piece for me is this is where huge numbers of stops occur, where we have these great areas of fair pricing, because people don't like to negotiate within the fair pricing, with the exception of the naked volume points of control. Will be the only thing I'll give an exception to. And even there, sometimes they can just get traded straight through. So I prefer to trade in those areas of gray where I know the price is going to get negotiated. Right when I'm looking for longs, I like it to dip into those areas of gray, clear it, dip back in, give me pushes out, and then we use the overnight information to add to this and give us a more succinct picture of what we're looking for the pushes up and down. Then, once we have it, then we're going to the 5 minute chart. Right, once we're in an area we want to trade, we're looking for the setup on the 5, and then we're going to the algorithms to get the actual entries, push for the extension, use the leverage to our advantage. Anyways, have a great night, guys. I hope this helps. I welcome questions on it, and we'll continue to push this idea. And I know my artwork's not great, but the thesis and the theory is very good, and this will keep you, particularly by not trading in the fair value areas, out of significant trouble because we tend to crisscross those with very little negotiation in price. Okay, have a great night, guys. See you later.